And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, are with you today, and thanks for joining us here on KCMX. Here at the KCMX studio, we have a full house. All right? We got the whole schmo here today. We're talking mortgage interest rates, the market, what is going on here as we've coming around the Christmas and New Year's time. It's really the most, the fun time these last 2 weeks. New Year's Day and all that, and Christmas and football and a lot of activity going on in real estate. Guy Giles is here, Joe. He's our resident mortgage interest expert from Bank 34 Mortgage.
Hey.
End of the year, what in the world? You survived 2018 as well, didn't you?
Yeah, barely. I still got some hair left, not much, but we're making it through.
And,
so.
and you've had a pretty good year. Lending, there was a lot of activity going on, isn't there?
It's been my best year. So, and now that I'm kind of branching off into some other kind of specialty products, I'm still, for the most part, doing the regular loans, but those are available, and that's actually becoming a little bigger piece of what I'm doing.
Yeah.
So, bank statement loans, things like that.
Is it true that when interest rates, when the stock market goes down as it has, the last couple of weeks, that interest rates actually followed that and dropped, didn't they?
Yeah. It's just all about where you're putting your money. If you're putting it into long investments or shorter term stuff, and when they get scared, people tend to throw money into longer term things like the mortgage-backed securities. So, yeah, it's actually helped the rates, and I've been locking people back down in the fours.
Below 5%, isn't it?
Yeah.
Well,
and that's not everybody, but the one I just came from the signing a minute ago, that was for sure, and they were excited to have it.
So you've been doing that below 5% now.
Most of this year.
I think that if you can do that, that makes buying
mentally it's just kind of a nice
figure
thing. But
Power,
anything
though,
under
for
6 is still a good rate.
The 5% barrier. I think that's maybe in your own mind that you don't want it to go above 5%, right?
Yeah, and literally on a couple $100,000, even if you go up an eighth, you're probably talking $6 a week or something. So it's really not the end of the world if you get a little bit of a worse rate, because by the time you factor in appreciation, and we'll go into that a little bit, hopefully today, you're still really far ahead as far as historically. So,
and we always talk about historically, it's this and that. It's still, when those interest rates go up, even an 8%, it drops out a whole bunch of people out of that market, and that's what we don't want to see, because affordability then becomes the big issue, and that's what I think we're facing here, is that affordability issue is coming back up.
I think that definitely I've seen some buyers that really, some sellers that really felt like they were in control, now coming back and accepting things that they probably wouldn't have a month ago or 4 months ago for sure. I had one just yesterday that they were negotiating, and they came back and said, nope, this is what we want to do. And they said, all right, you know what, we'll just find one that we can afford. And the sellers came right back and said, no, that sounds actually pretty good. So they accepted it, and they're moving on with it. So I think it's balancing out a little bit between a buyer's and seller's market, which is kind of nice for a change.
Well, you're talking about the normalizing market that we've been talking about on the show now for a number of months. Yeah. That again, if you're above 500,000 and all the statistics, then the available inventory, months of supply is all up. If you're below that $500,000 level, you're still back into that seller's market there, although that's leveling out. That's what we're seeing. And the biggest reason is that, remember, in November, the latest MLS stats, 94% sellers were getting of their list price, which was down from 96 point something just a few months ago. So that's telling us that buyers are having more negotiating power here in bringing down some of those prices, leveling them up.
And
right, I'm going to say Cheryl Malone is here with us. Cheryl's been with us before from Windermere Van Vliet. Is that true, what we're saying? Or is it making sense? Or are we just kind of blowing a lot of hot air around here today?
No, I've noticed the same thing. The sellers are needing to get a little more realistic with their prices, and the buyers are a little more in control right now, and certainly not getting the full price offers that they had hoped for.
Well, and I had an agent tell me this week in Talent on Schoolhouse Road, $279,000 house went on the market one day. They had 5 offers, 2 cash offers. I haven't heard that in a long time, but it's in that price range, that 250, 275 range. Well, obviously, with 5 offers, there's a lot of activity going on out there. I was shocked at that. I haven't heard that in a long time. Right?
Man, Wish you had like 20 of those listings.
Yeah.
Huh? That'd be nice. But
Yeah.
the one thing we don't want to, there's a lot of media out there saying that the housing market's crashing, that it's bad right now. They're still anticipating about a 4.5% increase over the next year. So even though it's not going at the pace that it has been, and we have seen some price reductions, I think it was just kind of like Cheryl was alluding to, a little bit of unrealistic sellers, just maybe going a little bit too high, and now they're coming back down where they should be. But it still is going up, and it still is appreciating, but it just not quite as fast as it was.
When you say appreciate,
it's more normal.
I think it's like 98% or something of Oregon homeowners are now have equity,
That's amazing.
in their homes compared to what it was a few years ago. So all of those things, the housing market has definitely changed for the better.
Yep.
But if you go around the Western United States, it's changing there also. The big markets they're having issues.
Man.
Prices are falling. A lot of inventory around, so we're kind of in the bubble. I wonder if we still are in that bubble, where people want to come here. We're not affected by a lot of things, and people still want to come here and live, right? I mean, that's kind of what we are.
Well, I remember I've been doing this almost 33 years now, and back in the day, it was 3% appreciation was the norm.
Yeah.
And so 4.5% is really good. Actually, it shouldn't be going up too much more than that and getting out of hand.
Well, remember,
We've been having double
double
years.
digits.
So that has to normalize at some point.
Right.
It'll be interesting to see. Remember, on January the 1st, next week, that will be the set real market value that the county will place on your property for next year's tax purposes. That comes January 1st. But, it's slowed down a little bit. It's going to be so interesting to see what that final number is going to be in terms of valuations. It's different by neighborhood, by community. But overall, you're right. I don't think it's going to be double digit this year. No way. It can't be.
And I love my little corner of the world in Southwest Medford over there. We're about the last ones that saw a nice surge in our county property tax. And as I saw East Medford and other locales go up the previous years, we had a $22,000 jump in my mid $200,000 house.
In Southwest Medford.
Yeah, so and we've been a little bit behind, but that was our year. Last year was our year, and so I would assume that county number would be far less this next year around when I see the statement in November.
You like it when it goes up for you, don't you?
Well, that's more than I've seen, in the 10 years that I've owned the house, obviously.
Yeah.
So
Yeah.
that indicated that our little region there has made some gains too, and we've got a lot of new construction over by South Medford High School.
Yeah,
a lot of
there
new
is.
construction in areas around us. Even Garfield has got. And Aspen Street has got some new ones that
Well,
Dieter Ripson are
Okay,
putting up.
Medford's got the Southeast Plan. Remember when that thing went in a few years
Yeah.
ago? We're going to build 10,000 homes in Southeast
they're
Medford.
going to,
Remember that?
yeah.
Oh, they're going to do them now. But boy, people, again, I had a lot of people through open houses in that area up there. And so many people come through there and going, gee, those new construction homes up there, they're on tiny little lots. There's no space. And for $500,000 and stuff like that. And so people are shopping more. I'm thinking maybe. You think that?
Yeah, but I've got one of my buyers coming down here, and they're literally picking South Medford for the basketball team. I guess he's got some kind of a stud son coming down to play basketball, and he wants to make sure he plays for South. So you guys watch them the next couple of years.
Well,
South, your values are going to go way up. Man.
Thank you.
Get another Kyle on your hand. Yeah.
Yeah. It's been a while, and they could use the help this year, obviously, because they need that. Well, it's a desirable place here. Schools, I know John L. Scott's got a new thing you can search by school even now. If you're home, you can have buttons and you can kind of do those things. So there's lots of opportunities out there to see this.
But to go with what you were saying earlier, I think they're a little bubble as far as, I thought you were talking housing bubble at first, but for this little area, I do think that it's going to continue to just attract people from all over. They don't want to be in California. Hopefully we don't turn this into California, and then we'll all be selling real estate in Idaho. But at the end of the day, a lot of the people that are coming are a little older now. They're in their 70s, and they don't really want to wait out another recession. So even if we do get a little bit of a pullback or a little bit of a correction with their prices down in California, I still think it's going to be a bargain for them to come here.
Yeah.
And unfortunately for a lot of the local people, it makes it. They're a little priced out of the market sometimes, but I think the market will be good around here for the future.
You're hoping that it's going to be. I agree with you totally there.
And my investor friend Dan Koo, whose little consortium has properties in San Francisco, we looked at a 1,700 square foot two-story in Grants Pass, built probably 10, 12 years ago. And every time we go see one, he asked me, what do you think this would be worth in San Francisco?
My
So I started
gosh.
at 1.5 million, 1.75.
Yeah.
So and that's a very modest. It's pretty nice 3.2, but boy, oh boy, it just gives you an idea of.
Yeah, it helps put it in perspective. I mean, it's
Millions
always a
of
bargain
dollars.
for these guys. I was losing people on 400 square foot lofts at $700,000 in San Francisco because cash buyers were getting them, and so it's still a bargain around here. And actually, that's some numbers we can look at after the break. After
All right. Well,
this,
we'll look at some of those. You know, there's a lot of activity going on. I was just say there was a wonderful article this week in the Mail Tribune, or I'm sorry, in Time Magazine. Time Magazine about the issue of manufactured home parks and how the demand is exceeding the supply.
I bet.
How property owners are forming against these large corporate ownerships that are raising rates and stuff like that. But the bottom line was there's such a huge demand and there's not enough out there for housing for people to go to. And these are the issues that we face. You know, and again, just building 3-2s. We talk about this all the time.
Yeah.
If we just build 3 and 2s, we're not solving any kind of housing problem here.
if
And
you
that's
build-
where we're at, right?
I have a ton of people who want to be in like a 55 and older community.
Okay.
They want to come up here because
Yep.
they're usually coming at the age 50 or
Yeah,
60
right.
actually at this point, and they want these little communities, and we just don't have them.
We don't have 'em.
We
And-
don't have them.
Well, I'm in Bear Lake Estates now, since I sold my house, and there hasn't been one opening in there in over
Really?
6 months.
Wow.
They're keeping them. There's nothing
There's
for sale.
hundreds of spaces. Yeah.
There's
I mean,
211 of those
Yeah.
of them in there.
Yeah.
So our housing needs are,
Well-
still we talk about not being met in some ways, and I think that, but that drives the rest of it because you're still looking. You're always searching. Millennials. This is an interesting statistic that millennials, we think they're not buying. They're living in apartments right now, a lot of them, and they're foregoing that opening home.
Mm-hmm. Yeah.
They're going to the higher ranges, is what statistics are showing. They're not starting here down at this level. They have enough money. They're millennials. They're living. They're going to the higher priced homes to start with, is what we're seeing. But they're still having home ownership, and remember that's up in this country.
Man, that's a penalty flag. You
Ah,
have to
so much.
suffer. You have to live in tiny, small little houses with poor, insulation for a few years.
we had my daughter in the closet when she was younger because there was no place for her bed.
Yeah.
And
Well,
You can't just go right to those $400,000 homes. You don't get the full experience of
Yeah.
home ownership.
the $79,000 fixer-upper,
Yeah.
on this side. Yeah.
the way.
Well, we got a break coming up here, but I want to get, when we come back, though, we want to talk about contingencies in sales, because with so much out there, we're seeing a lot of sales contingent on this and contingent on that. So we're going to talk about that when we come back. We're with Cheryl Malone from Windermere Van Vliet today, and Guy Giles, a resident mortgage expert from Bank 34. Below 5%, that's good to hear.
not everybody.
I know, but for if you got good credit, you get that, right?
Disclaimer.
yeah.
It's not quite 5% for everybody,
But
but
if it keeps trending like it is, we'll be talking mid-4s before
Yeah.
long. But
And
I don't see that coming. But
it may not go that low. But I think the biggest thing is that as long as they stay affordable here, then you can continue to buy and look. And if they go too high, then
Factor that
all
into
bets
your
are off.
decision. Yep.
Right, all bets are off. Anyway, we got a break coming up here. We're on the Real Estate Show. We're coming right back to KCMX after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you today here towards Christmas. Hope you have whatever you do, have a wonderful Christmas and enjoy the holidays, right?
Should've
So
worn-
many times
I should have worn my new Christmas
we never
sweater
thought
today.
of that, like a Christmas.
Yeah, I've got a new one.
You got your ugly golf shirt instead of your ugly
Yeah.
Christmas
Right?
sweater, right?
Yeah. Well, this is also
Remind me next year.
Yeah. This is the party season. We had a wonderful event. John L. Scott, the agents, a Christmas party. Our friend Jeff Rogers, the owner, threw a big party. They celebrated a big year. I think they announced at that time. So far in 2018, we talk about $3 billion. In $3.3 billion in sales in Jackson County.
Jackson County.
Yeah, they announced John L. Scott has $788 million. That's how much activity is going on around here, which is a lot of.
That's
a
good.
lot of sales. I mean, it's a lot of activity, which I think is really healthy for us. We're with Guy Giles is here. He's from Bank 34 Mortgage. Cheryl Malone from Windermere Van Vliet is here. Cheryl's been here before with Guy as well. You look forward to 2019. What do you think, Cheryl? You've weathered a lot of the storms here. You think it's going to be like we're doing? Tell me what your thoughts are.
Well, yeah, I think next year is going to be a great year. They seem to think that this year was pretty slow and kind of dead, but actually I think it was one of my better years as well.
I think for all of us here, I think
yeah.
we're all talking that, yeah.
And and a lot of people still relocating up here, wanting to get out of California, and mostly California people coming here, but looking for investments.
Has the fires affected? I've heard of different people now saying they know somebody who's moved up here, living with somebody from the fires, and they're looking, those kinds of things. But I haven't really seen a whole lot of effect from that.
I've had a couple of people call me. Actually, I'm going to show somebody this weekend.
Okay.
And because I was down there helping with the fires last week and saw it was pretty devastating. So.
Yeah. Oh, the photographs, aren't they? I can't even.
The timeline of that fire that we saw in the newspaper of how quickly it burned from its start point into paradise was almost not enough time for people to evacuate, even if you got the heads up.
No,
It's really scary. It would literally terrify you to live through an experience like that.
Well,
I would never.
Being down there helping with some of the people who were affected by that, I did learn some things about, checking up on your insurance and making sure you have certain things like your building code upgrades and things like that, because what's happening is they're not able to rebuild the home that they had based on, upgrades and things like that. So it's just a good reminder for everybody to talk to your insurance agent, find out exactly, what you need to do in order to, any things, specialty items being covered.
And I think
good for you to help out down there too.
Yeah, it was.
Good
It was,
on you.
Yeah.
it was good.
You're planning another trip on the 13th.
Yeah.
I think I'm going to go down too.
Well, well, that's. I mean, realtors, everyone have pitched in to help and support that there, and we would hope the same thing happen if it happened to us here, which we hope it doesn't. I hope that may that never happen. Speaking of fire insurance, it's going to change for people living in the rural areas. You're going to see fire insurance added like flood insurance, like a rider to your bill, to your homeowner policy. In some places, you may not even get it. And we saw Pacific Gas and Electric. We've talked about them, not bringing in power to rural areas outside of main roads. All this is changing. This whole rural living, when you're going to do it cheaply, now it's going to change. It's going to cost you more. It's going to cost you everything more to live in the rural areas because of these fires. I don't think that's going to change. Anyway.
The one gal that was telling that we were working with her on her house, and she was saying that I guess in 2020, California is going to require that you have solar, and so she was kind of excited that when she had her house rebuilt that she would be getting the solar. So I think that may be a lot of good options for people.
That is true in California. You have to have that in 2020. It's coming to Oregon probably a few years later than that. So new construction only, that kind of thing.
Right.
It only works if you're in a solar area. People say I don't have anything. I can't have no solar. But anyway, it's changing. It's changing very much. Well, I've got you both here. I want to talk to you about contingent offers. Because right now, my experience right now is I've got several things going on, and everything is contingent upon somebody else selling this and this kind of thing. There's people wanting to move up. Remember, we're moving up, or we're right-sizing, coming down, and doing something else. So tell me what you see as the lender when you see an offer come in and you have contingencies on it of a sales of certain kinds of things. What do you do with that, guy? Is that good, bad, or tell me what you think?
Well, it's never fun for anybody because that's a lot more pressure to make sure that everything happens on time. I had one today that I closed that, I can close mine just fine, but then you're still worried about the other end. And now we got renters in one of the places that doesn't want to get out, and they're supposed to be out tomorrow. So, I mean, there could be more than just the house that's contingent. I mean, there's just everybody's moving. It's super stressful when you have to do two. We do have some ways around that here where we can do a cross-collateralization loan. I got a couple of those that I've done, and you can write a non-contingent offer on a house. You're only qualifying for the one payment, believe it or not. Those rates are really good, just above the mid-fours. I can do those around 4.625.
I stop there right now. Cross-collateral loan. You've talked to us about it before. I've sent some people tried to get these done with this, because if you're the buyer and you've got your house to sell, and you want to buy his house, and it's contingent on this one selling. Your position is not very good, right? Cheryl, when you negotiate, right?
A lot of sellers won't accept an offer unless your house is already in escrow. So what do you do first? Do you go out and find a house and then try to sell yours, and then sometimes you're under the gun to sell yours for less in order to get it closed so that you don't lose the other one? Or do you sell your house and then not be able to find anything else? So this loan that he has is really good. for people who have equity in their home in Oregon here. It's a great option.
By Oregon, she's saying that
Okay.
it doesn't go across state lines because of
Okay.
title issues. But
Oh, okay, all right. But how does someone qualify for that? And you said you have to have equity in your other house. So how do you qualify for that?
if you have at least 25% equity in your current house, then you can write a non-contingent offer on the other one, and you'll basically close. They'll qualify you on what it'll look like after your house closes. So you don't have to qualify for both loans. That said, if your house doesn't sell for 6 months, like in the one case that
Right.
we dealt with, the guy didn't want to have that higher payment because he was not planning on selling his house here for another 6 or 7 months. But in normal circumstances where the thing's on the market and you're going to sell it, there's a requirement to have a couple months of reserves someplace.
Okay.
But you can literally even bake in the down payment, everything just from the equity in your house, and you're just coming in writing a non-contingent offer. And
That I was going to say, it relieves the stress on the seller and the buyer. The buyer, having to try to do everything at one time. The agents, they'll get their offer accepted, as opposed to being up against somebody without that contingency. And
absolutely.
then sometimes there's 2 or 3 of them stacked on top of each other.
Yeah.
It's like, oh yeah, I got an offer, but they needed to sell their house, and now you're waiting for 3 deals to all close. And
what
So
she
there's a
said
hiccup.
too, I didn't mean to jump in,
okay.
but what she said also about not having to sell your house for less than it's worth because you're under the gun to get that thing sold really quick.
Right.
You're not short selling. Not short. It wouldn't be a short sale, but you know what I mean.
Yeah. You're selling it for less
Selling
than
it
what
for
you can
less,
sell
yeah.
for to
So
get
you
out
can
of it.
do it
right.
on your own terms, or if you have a property that might be a little more rural in nature and you have some things that you've accumulated over the last 30 years and you don't want to be under the gun to get it out of there.
Is
that
there
day.
a time frame that it takes? Say you've done the thing, you've made your contingent offer, it's accepted, it goes, and your other house that you're getting out of hasn't sold yet. Say it goes. Is there a time limit?
There's
3-4
not.
months? Can I rent it while I'm out of there also?
Technically, they don't bother you about it, so it could be. Yeah, I mean, it's not the goal, but yes, I mean, they're never going to force you to sell that thing.
Maybe that's a way to do a contingent offer, keep your house, and rent it out and keep it as a rental.
Yeah, it's
I
not
mean,
how
so
they sell it.
But otherwise you got to
theoretically,
sell it.
yes, it could happen.
Yeah, but you take the risk that you've got 2 loans until
And
you've
the bank
got
is
something.
too. And if you can't sell it and you have to do something else with it, and you decide to, hey, that just life happens.
Well, we want you to have. If you're the buyer, you want to be a strong offer, right? I mean,
Right.
Cheryl, you don't want to go in weak, or you're just going to get trampled. So this is a way. This cross collateral loan is something that if you have to sell your house first. You got to get it on the market, right? I mean,
Right.
someone's not going to accept it unless it's on the market and going. Hopefully, it's in contract.
Yeah.
So it's a risk. What comes first, the chicken or the egg, right? I got to put it on the market first, or do I wait?
And Cheryl works with a lot of people coordinating that sort of thing too, where she'll come up with ideas and things for them. And it's funny, half the time when we're doing something together, I don't even have to do my job because she's like, well, I already set them up, and this is kind of what they're thinking. She doesn't engage in loan behaviors, but she knows enough and has been around long enough where she can kind of guide people. And we've done a lot of second homes and things like that where people do have the down payment right now, but they want to be able to qualify with their income before they move to town.
Well, I would sure want to do that. I mean, it just really would. That makes a lot of sense to do that, right?
Yeah, again, I always explain to them that's really the best way to go. So then again, they can take their time moving. They know exactly what they're moving into, what to bring, and it just takes the stress totally out of the whole equation. They still get owner-occupied rates with the minimum amount down, and then when they do sell their house, they can pay down the loan balance and recast their loan as if they had that big down payment to begin with. So they're not really losing anything other than some, a couple of payments or so. But at least they're not going to short themselves on their sell of their home. So
Right.
We've got a break coming up here in a couple
Costs you
minutes.
a lot, yeah.
Tell me about have you
no
Guy,
easy way to do it.
No.
have you loaned on any additional dwelling units? We have these new rules that have been out there, allowing you to add to your properties additional dwelling units here and there around in all the cities, right? This is what's going on.
Yeah.
Have you
Me
made any
personally,
loans
I
on
have
it?
not.
No.
I have not done. I mean, I've done loans for people that have ADUs a lot, but I have not. As far as these new rules and being able to break off your
So you
properties and do
people
different
haven't
things,
stomped. People haven't, in other words, been breaking the door down to get to you to do ADUs.
Nope, not yet.
You know that rule, Cheryl. What do you think of that? You think we're going to see some of that? I'm hoping that we are. I mean,
Well, I think especially in Ashland, because it's so spendy and people move here and want to live in Ashland, that it's a way for them to afford to live in Ashland, and you know, you can have an ADU that's half the size of the main dwelling, and you know, it's a matter of what it's going to cost you to build it. But once you build it, then your property is going to be much more saleable and marketable and open to a lot more buyers in the future.
Yeah.
So
they also have the Cottage Ordinance there in Ashland, and I've got a client where I think we're going to be the first one to put on into the new ordinance, where you have a small lot that is divided 3 ways, and you're selling one part of that little lot and the house with it separately with the land. This is what the Cottage Ordinance has done in Ashland. I think we're going to be the first ones to actually put one on the market. He's almost ready to go. And what do you price that at? That is going to be so interesting, because we're talking now.
how big are the houses?
It's on a tiny lot. I mean, they're 300-400 square feet. They're small, but the land comes with them, all attached to the same house and the same land. It's going to be. I can't wait to see how that's going to play out. Because it's a big thing.
Is it going to just be really high price per square foot?
Small, little, tiny. Yeah.
Tiny little, but it's just going to.
But it'll probably be in an affordable price range that people
There
who
you
want to
go.
live in Ashland are willing, can afford, and that's
certain-
all
yeah.
that matters to them, is they're living in
Right.
Ashland.
Can I have $150,000 on a small, tiny house like that?
It's not going to bring more families.
$125,000.
It's
Yeah.
probably cheaper than renting. So
It might be.
Yeah, yeah.
It might turn out to be that way.
And
It's not going to help families.
Yeah.
yeah,
with
even
the
if
housing
not, you're going to
situation.
get the appreciation and all the other
Yeah.
advantages of it. So I'm
Property
sure they'll
owners
probably
do
go
well,
quick.
Well, the idea is home ownership, and if you'll take care of your house better if you own it, and so that's what those ordinances have done. And we'll see if not matter of probably if, but when more of these additional dwelling units are going to be out there, and guys are going to be loaning money on them to help you along the way. I think it's a huge thing. It's probably maybe the top ways of helping solve the housing problems, so many of that we have in these communities. So anyway, we'll see how that goes. We got a break coming up here on the Real Estate Show. We're with Guy Giles from Bank 34 Mortgage, and Cheryl Malone's visiting us as well from Windermere Van Vliet. We got a break coming up here. Check out any of our past shows at realestateshowOregon.com. We're back to KCMX after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Hope you're having a terrific holiday season. Merry Christmas to you. Christmas, New Year's, a fun time of the year. Lots of activity, family, friends, all that. So hope you'll have something
Fires, food,
enjoyable.
football. Top
Do
of my
something
list.
enjoyable. Gosh, man, that is. Anyway, today here on the show, we've been talking mortgage interest rates and the real estate market in general with Guy Giles from Bank 34 Mortgage and Cheryl Malone from Windermere Van Vliet. So, okay, we're into the last part of December. We talk about activity in the week. Let me just give you the weekend review, okay? Cool. I always do that every week here, all right? And I mean, we're December 11th to the 18th. Jackson County, 46 new listings last week, same as the week before. Okay? Pending sales, 63 last week, 69 the week before, down from 80s a few weeks ago. Okay, so that's down a little bit. Closed transactions, 56 last week, 57 the week before. So there's still a lot going on. In Josephine County, those numbers consistently also 27 new listings, 21 pendings, and 28 closed sales. So activity, again, continues to go. The biggest probably challenge is the luxury market, the high-end market. That is probably the toughest right now. Maybe I think I've ever seen it. There's not much activity going on, right? Cheryl, what do you think?
Well, yeah, I can agree with that. And lower end stuff is going a lot quicker.
Yeah, and again, in the luxury market, the $1 million pluses in the cities, there's a 2-year supply.
Man.
So the only things that have sold have been some rural properties and some ranches in those ranges. Other than that, there hasn't been many sales in that luxury market. So you're at that 500,000 level and higher. Or say you're at 769 and below 750. I mean, you need to really look at these because they're not moving, and they're not going to move right now, I think, for a while. I don't know what the reason is. Maybe it's because the tax laws only allow you $10,000 to deduct from property taxes and things. I wonder if that's making an effect on it. But you say you guys still do second homes and stuff like that, right?
Yes.
Generally, what, maybe 380 to 500 or so ish for the second home market. Maybe
Okay.
people are trying to come down here and downsize a little. The offer that actually my assistant's writing the letter for right now is about I think 780, and they're going to go in at 740 and try to get a little bit of a deal on the thing. So, might be a good time if you're looking for that sort of thing.
If you're,
And we've also known that people have come here and not put all their money into one big, huge luxury home. They buy themselves a beautiful home and a second home as well as an investment with the equity they sometimes come armed with. So not all of it necessarily goes into a first home or all into one property.
well, the problem is that the equity in these things, that the prices that people are going to afford these things or not, they're just not buying them. The problem is that people are selling their $1 million homes and there's nobody buying them right now. That's the problem. And so you talk about that is truly a buyer's market right now. I mean, totally.
I'm stuck living in my $1 million home. Dang it, that's a problem. Jeez.
Well,
I'll suffer it out.
Yeah.
Until the market comes to me.
Well, it'll be a while, I think, and people need to realize that's a very sobering thing because these things went off the market, and there's a lot of them out there. And
certainly, if you've got a
both
luxury
counties.
property and you're going to transition soon, it's to be aware of. For sure.
Let me ask you this, Guy. We've seen FHA loan limits have increased. All right.
Yep.
To single-family residents, Jackson County is $320,000. Klamath and Josephine County, $314,000 limits.
Yeah,
what does that mean for people?
So that actually isn't. That's the limit of the loan. So you're 3.5% above that would actually put you 3.5% above that. That was the math I was doing when you made me take my calculator away. So I'm not gonna.
Okay.
I did on the floor a little earlier
So what
today.
what does that mean though? If the $320,000 is the FHA loan limit that you can give, right?
Yeah, so it'd be roughly a little over 10,000 more than that. So maybe 332, 333, right in there. Just kind of easy math,
but that's
nice for an FHA loan as far as that goes. If you have a lower credit score, it's a good option for people. So and with housing prices going up, I literally had somebody that was trying to buy one, and if this thing was 3 months ago, they'd be in a brand new Hayden home right now, right around $300,000, and they're actually still making. They have a big subdivision, and just shameless plug for these guys because they're building affordable houses. But they have a brand new subdivision in Eagle Point where you can get as low as right around $250,000, and they're doing some huge rebates right now, just trying to get people excited about this.
$250,000. Are they 3 and 2s?
Yeah.
Small 3 and 2s.
Yeah.
1,300, 1,400 square feet, right?
Yeah.
Small lots.
Yeah.
That's
small lot, but most people are living outdoors on their bike doing things anyway, and the only thing I do in my yard is mow the dumb thing. So
they're affordable.
Yeah. So
and when you get up, higher than that, those are going to go. You do that. I mean, you have that, right? Also, you see that a lot in those areas.
The conforming loan limits went up also to $483,000. I wrote that down someplace before you took my calculator. $484,350 for next year.
What does that mean?
You could go 20% above that, and then that's your new price. So they were down at $417,000, and they just jumped up to about $420,000.
I'm sorry, who's they?
This is Fannie Mae, Freddie Mac.
Okay.
So just your normal loans without having to go into what's called a jumbo or a portfolio loan that the banks do. So you can get the best rates all the way up to $484,000 now. Yeah. So that's going up also.
Well, that covers most of us, doesn't it? $484,000. I mean,
that's your loan amount.
Your
down payments above and beyond that. So that puts you well over 560.
And that'll put you up in that category. You'd be in the
buyers. And
buyers
it might cause a lot of the people that you're talking about in that luxury market. You're almost kind of hitting that at that point if you have $600,000 house and 20% down.
Yeah.
So who knows? Maybe that'll make some of that stuff move also.
Well, go ahead, Cheryl.
I was just going to say what I find is there people are relocating here and paying cash, selling their house and paying cash for a house, or they're putting 3 to 5% down. To me, I'm not getting a lot of people who are putting $100,000, $200,000 down. It seems like one extreme or the other.
Okay, makes sense for buyers.
Well, and definitely that gets you into a spot with 5% down where you can get I think the average new construction in the country, I don't know what it is for around here, is around 400, a little over 400,000 for a new construction house. That still gets you into something like that with 5% down.
Yeah.
So.
Yeah, you just got to be able to pay those. Exactly. You got to pay those mortgages every month, and that's and that's where you get.
And that's kind of the difference in renting and buying, and that was a little bit of the information that I brought. If you wait 3 years, you're basically, because your house is going to compound. Say you bought a $400,000 house and then it went up 4.5%. For the next 3 years, as that compounds, you're looking at 17, almost 18% that you'd lose by renting just in appreciation there. So I mean, I think if you can get in the game, if it's $180,000 house or whatever, at least get into something. I started out in that single wide that I talked to you guys about earlier, worked my way up, and now I got a couple of houses and live in a decent one. But you don't have to be in your best house to begin with. Just get in there and start the thing
and just start. So and you have to, and if you do, then you're going to remember if the average renter in this country has a net worth of $5,300, and the average homeowner in this country has a net worth of $231,000. That should tell you right there. Homeownership is where you create wealth for you and your family. I mean, that is what we talk about all the time is that kind of thing. You're going to put money in that, or you're going to go put it in the stock market. I wouldn't want to. I don't put it in the stock market. No way. I mean, it's too like this, where housing kind of goes like this, in terms of values. It slowly builds. And you're right. If you bought today, I think it was 6 years from now, if you bought a $400,000 house, you would have a $60,000 equity in that house in just 4 years at a 3% rise over time.
Did you just guess that?
No, I actually had a class with that.
So you're right close. That was
pretty close.
What were you going to say?
Oh, I was just going to say, if you get into something as opposed to paying rent, and you live there 3 or 4 or 5 years, and you make it a rental and go buy what you really want, or take your equity out of there and go buy the home that you've always wanted, as opposed to just renting. And that was our main message today as well is that it's certainly whatever the market is doing now, it's better to buy than rent in the long run. In the 3 or 5 years, you're going to say, my gosh, my payment's only this, and I would have been paying that for rent. So it's.
And you haven't had to move twice.
Rents have stabilized a little bit too.
And first and last
all right.
And all of
well,
that.
That's going to do it for the Real Estate Show today here on KCMX. Thanks to Guy and to Cheryl for coming by and sharing some insights with us. We appreciate that all the time, And remember, a lot going on in the real estate market. Don't be on the sidelines. Get a hold of an agent, someone who can help you, because it's really a lot of fun doing this. I think more than anything, we enjoy it very much. Hey, that'll Christmas. Merry Christmas to you all, and we'll talk to you next Saturday back here on the Real Estate Show. In the meantime, God bless you all. We'll see you next week.